All right, it is my extreme pleasure to invite you to the last panel of the day. I get to introduce Mark Florian. How exciting is that? Mark is the managing director and head of BlackRock Global Infrastructure Funds. We are really lucky to have you here with us today, Mark.
Thank you.
He's also a Duke graduate and a really wonderful Duke citizen who has been helpful in a variety of ways to us. He has been in charge of a lot of infrastructure projects for BlackRock and other entities over the course of his career. He has formulated strategy, he's constructed portfolios, he has originated investments, he has managed those investments. And a lot of that has been around the energy transition, which is why he's here with us today. He's worked on carbon capture, he's worked on energy efficiency, renewable and sustainable fuels, and energy storage, among other things. So throughout the day, Mark, we have heard a really amazingly curated story that has taken us through clean tech companies that have utilized capital that has been created by the IRA. We have heard from suppliers of early stage capital, whether that's venture capital or PE. We have heard from banks that provide capital to scale up transition. And we've heard from philanthropy in just our latest session. So as we come to the end here, this is sort of just part of the framing of what we're going to be talking about. The convening of this expertise has been exciting, but now we need to figure out what it all means. And not just what it all means, but in particular, I want us to be thinking about what is the role for universities in this larger ecosystem. We've talked about all these other entities, but now I want us to think a little bit about what is the role for universities. So universities are not public, we are not private, we are nonprofit, but we're not that kind of nonprofit. And we need to figure out what our sweet spot is in this larger ecosystem so we can also accelerate the transition. So I think that's something fun for us to think about. So that's our charge in terms of what you and I get to do in addition to sort of leveraging the considerable expertise that you bring with you today.
Thank you.
So I want to just start, we've heard about the frictions. That's been a lot of what we've been talking about today that have historically impeded the flow of private capital. And we've heard about this historic investment in public investment to accelerate change. So I'm just going to ask a very big question. How do we turn billions into trillions? And how do we do that effectively? How do we turn that public investment into productive and effective private capital? So big softball question to you.
Is that a softball? I'm not so sure that's a softball. That's a big question, Toddi. No, first of all, thank you for this convening all of us to the collective group that put this together. It's a very, very impressive group of people today, and I've learned a lot. So it's great to be here. I'm going to take a lot of what was said today, but try to frame it a little bit to think about what are the next steps and how we can catalyze further capital. As I thought about our session, and first of all, you've got to think about, well, billions to trillions, are there really trillions? And the markets are huge and available, but there's some aspects of those markets that we really need to think about as we formulate energy transition types of projects and businesses. First of all, is the capital there? Just to give you a sense, there's about $135 trillion in the global bond market. It's a lot of capital. There's about $120 trillion in global equity markets. Those are public markets. And then you have trillions and trillions and trillions in private market investments that I'm part of, and many of the people you heard from today are part of, that are also available pools of capital. But one thing that a lot of people don't realize is that if you want to capitalize a business or a project or an energy transition initiative, you're in competition. There's lots of companies, individuals, and others around the world that want part of that capital. And so it's challenging. What do you need to do to get access to that capital? First of all, there's a price to that capital, which is that investors want some return on that capital. They want to get their money back, and then they want to have a return on that capital. And so the price is that return expectation that an investor has. But how do you determine that price? One is the duration of the investment, but the other, more important, especially for energy transition, is risk. And what are the resident risks that you're grappling with? The more you can de-risk, the more capital will be driven into this marketplace. So maybe I'll walk through just a few risks that we think about in all the investments that we make. And I won't go through, there's dozens of them, but I'll just go through a few key ones that we think about. And then what I'd love to do is tell you about a specific project where we took on a lot of these risks and we figured out a way to make it all work and deploy a lot of capital. So what are some of the risks? Well, first there's macro risks. We think about country risks. Where are you investing? Is there a reasonable rule of law? Are the regulatory frameworks in place that you can rely on that provide a stable investment opportunity over time? Then you think of, as part of that is governmental risks. Will you have changes in law? Will you have changes in subsidies? We were just talking about, will the IRA look like it looks like today, 2 years from now? Who knows? We'll find out. Are there other things that government can do that can impact? We had, in one country we invested in, they raised taxes a lot on us. That actually impeded some of the returns that we were expecting. So we need to think about governmental risks. We also think about how are the investment that we would be making, how tied is it to economic risks, to GDP fluctuations? There's some investments that are very tied to how the economy performs over time, others not, that are completely insulated. So that's another key risk. So we think about some of those macro things, and then we get down to more the micro of the business or the project we're actually looking at and we want to execute on. One of the big risks in energy transition that we grapple with all the time, and it sounds simple, but it's not, is permitting. So oftentimes we have projects that need permits to go forward from various layers of government or other entities, and it's a real risk. We can talk about this more if you want, but we do have an investment where tens of millions of dollars was put into building a carbon capture system, essentially capturing CO2 from emitters, moving it through pipes to a location where it could be safely sequestered. This was in the United States. We tried for 5 years to build this. Tens and tens of millions of dollars. Ultimately, we canceled the project because of permitting and NIMBY, not in my backyard, people that were fighting this pipeline project because of that. So it is a real risk. Then if you don't have permitting risk, let's say you have a fully permitted business or project that you're working on, you need to think about the revenue model. Is there a stable set of revenues you can access that over time will pay you back? When we build some new infrastructure, we're putting all the capital in up front, and we typically are getting paid back over 10 or 15 or even 20 years to get our capital back and a return on that capital. So that's a real challenge because you want stability in that cash flow over time. You want to see it and touch it, feel it, so you can feel comfortable making the investment. The last key risk I would mention is operating risk. So a lot of energy transition is about different types of equipment that are producing sustainable fuels or clean energy or other things that we need to achieve net zero in the long run. And it doesn't always work. Things break. And sometimes you're working with newer technologies that might have been proven in a small pilot plant, but now you're trying to scale it 10 times bigger. And sometimes there's a lot of risk in that scale up. So let me give you an example of a project we recently completed an investment in that had basically a new revenue model. It had a relatively new technology, and it had scale-up risk. Sounds kind of scary, doesn't it? We did a project for direct air capture with Occidental. And Occidental bought a company called Carbon Engineering, actually Bill Gates, who sponsors Breakthrough, is also an early investor in this company, that basically you suck in air, you strip out the CO2, and then you can take the CO2 and permanently sequester it in the ground safely. We had a lot to think about with this project. It's a $1 billion project. It's first of its kind. It had been successful in a pilot stage. And so we had to think about, first of all, I mentioned government and country risk. This is in the US. But part of the revenue model is the IRA. And is that going to change, and how would that impact ultimately the investment success? The other big part of the revenue model was companies signing 3 to 7 year contracts for carbon credits. They wanted to get credit for the CO2 that's being sequestered. By the way, this project is designed to put 500,000 metric tons of CO2 in the ground a year, so it's a sizable project. So companies are signing up to basically offset their carbon footprint. So that's another part of the revenue model. So you have to think about that potential variation in revenue streams from both companies and the carbon credit market in the long run, as well as US government, and build that into a revenue model that could work. And so we essentially split those risks with Oxy, and Oxy signed a long-term contract that helps support the project, but not fully. We're taking some of those risks, but we essentially parsed those risks between the two of us. The other big risk is operations. Again, this is a size and scale that's never been done before. And so we had to build it, and then it actually had to operate. And we looked at every step of the process. It's actually quite interesting. There's not a lot of new technology in terms of actually doing this. A lot of it is essentially renting expertise from the chemical industry, but it had never been used in this way before. And could you do that consistently with scale? And so we had certain operating guarantees and other things that we put together to try to manage the risk. So ultimately, we put $550 million into the project. It's, again, over $1 billion project. It's under construction today. It's going to be operating next year. It's very exciting to see. I was just at the project site. It's in the middle of nowhere in West Texas. You know, it's going to work. So, but it was challenging. It took us 18 months, 2 years to put this all together to get to the right place. So I think to answer, it's a long answer to a very big question. The money is there. The trillions are there. We just have to figure out how to compete for that capital. And the way to do it, I think, is by de-risking these models over time, which will allow more capital to be deployed. And we've seen it in the wind and solar industry, which changed completely over the last 15 years to a place where a lot of capital is being deployed every year by a wide swath of capital. So I'll pause there.
That's just a terrific example. I mean, I think you've really put some meat on the bones of really, like, this is how the work will actually get done. And I think that's a very instructive example of that. I've got so many follow-up questions, but I have other questions that I have to ask you because we talked about these other questions.
Sounds good. That sounds good.
But maybe we can come back to the notion of de-risking and insurance and permitting and some of those other things if we have a little bit of time. So we know that we've just been talking about this. There is so much institutional change in government, whether it's the shifting political winds, the questions about durability that you've just talked about, and in the finance sector. We have mergers, we have acquisitions, we have exits, we have market shocks. There's lots of change. Companies like BlackRock, because of the kind of long-term view that you take, and Duke, are built to endure those changes, right? I mean, that's the whole premise of the fund. And so how do we put to use that luxury of being able to take having a long-term perspective? Because I feel like that's a space where universities are too. That's why we're built, is to take a long-term perspective. So what are your thoughts about that? You know, how do we put that to use?
It's so important. So there are so many different constituencies involved. Obviously, there's government, there's NGOs, there's investors, there's businesses. And a lot of them tend to look to the short term. Mm-hmm. You know, what am I going to be able to show today, tomorrow, a year or 2 years from now? And having a long-term view is just absolutely critical. Otherwise, this energy transition is not going to work, or it certainly won't work smoothly. Mm-hmm. And so I think when I take a step back, and this is where universities obviously can take the long-term view and can help instruct us. We are long-term investors. We have 12 to 15-year funds, so we are thinking as well in an aligned way. But nonetheless, I think universities can make a huge difference in this. And maybe I'll just go to an aside and with some issues that I see that we need to think long-term about. First, the energy transition. Obviously, energy is a basic human need for all of us, and so we need this to go right. and we want our energy to be clean, but we also need it to be affordable, especially, I think about affordability as if it's not affordable, it becomes a tax on those with less means. So it's a social issue as well if we can't make it affordable. And at the same time, we need it to be reliable. And we need energy every second of every day, and we've seen in Texas, in California, in Europe, other parts of the world, what happens when you don't have reliability. And so that's much more complicated than saying we need clean energy. You need to think of all these things and the whole ecosystem of energy. And there's no one solution that takes care of all three of those things. And so that's one perspective I think is really critical. And then another piece of the backdrop that I worry about is that energy demand just keeps going up and up and up. And that's driven by population. Obviously, with more people in the world, you need more energy. But it's also, in the long-term trends, there's a bigger middle class around the world. People have more means. When they tend to have more means, they tend to spend more on energy. So that's something that's driving, those two things alone is driving energy consumption faster than GDP growth. And then on top of that, there's some smaller things I see. We were talking a lot about EVs today. You can imagine if you replace over time oil, gasoline, and diesel with electricity, that means you need a ton more access to electricity. Another thing another part of our business is to invest in digital infrastructure. With AI and the growth in the management and movement of data, there's huge, huge capital needs to build more data centers, basically big buildings that hold server farms that manage the internet and the cloud. The amount of energy consumption in data centers is immense. It takes 70% of the cost of building a data center and running a data center is energy. It's heating, ventilating, air conditioning, electricity. One fact that I was sharing last night with some of our colleagues is that in Ireland now, 20% of the electricity consumption in Ireland for the whole country is data centers. And that will grow, if it's unabated, to 45% in the next 5-6 years. That's another kind of sub-trend that's going on that's just going to drive more and more and more electricity demand. So anyways, we need to think long-term. I always think about Wayne Gretzky. I don't know if you're hockey fans or sports friends, but one of the great lines of all time to me was somebody said, "Wayne, why are you such a good hockey player?" And he said, "Well, I don't look where the puck is. I look to where it's going." And that's what we have to do. We have to look to where it's going. And I think Duke and other universities can really make a big difference in having that long-term view.
Very good. If you think about what the IRA has done, what additional changes would you like to see to facilitate more sustainable long-term investment? Like if the IRA has played a role in being able to facilitate at least some of the actions that we were talking about today, what else do you think is out there?
Yeah, I think, so it's interesting because we can drive more energy transition through carrots or sticks. And the IRA is obviously a huge carrot, a lot of capital and subsidies available to drive more. In Europe, they have some carrots, but they've also used a lot more sticks through regulation or penalties, if you will, if you're not meeting certain goals. So we can have more carrots and sticks if you want. I actually think for the projects and businesses we're looking at, I don't think we need a lot more subsidy at this point in time for a lot of the things we're doing, because the IRA really helped fill that gap. And as Mr. Podesta was saying, it was comprehensive. It wasn't just for wind or just for solar. It was clean fuels. It was carbon capture. It's a whole plethora of solutions, which again, I think we need. It's not about one approach. It's about, it takes a village to solve this issue. So I think we've got a lot of support. We need to know that it's stable and that it's long-term. And I don't have the arrow in my quiver to make that happen, but the more we can drive stability in the ways that we provide regulatory guidance and or subsidy regimes, that's really critical as well. So if there's a way for us to do that, incredibly important. I'll give you one example. In Europe 15 years ago, we were investors in wind and solar under long-term regimes. The financial crisis happened, a lot of governments changed their mind, cut the subsidies. So this isn't a new thing. This has happened before, and it's something that we worry about. So stability is key. The other thing I mentioned briefly is permitting. And this is a huge barrier, certainly in the US and other parts of the world, to getting energy transition done. The old rule of thumb, and I'm sure this is updated by now, is if you were looking at a new infrastructure project, something greenfield, on average it was taking about 7 years by the time you conceptualized a project to when you got all the permits and everything in place that you could actually put steel in the ground or cement in the ground or whatever it needed to be. 7 years is a long time, and that costs a lot of money, and there's risk that you spend 7 years doing this and it never happens in the first place. And so I think there are ways that we can accelerate permitting, not to cut corners, but just make sure that we have timelines that are visible, that are understandable, that people can invest behind. And there has been legislation at the US government level to try to facilitate permitting. Again, not to cut corners, but just to make sure it moves along. And then it really hasn't happened in the US yet. So those are a couple things to think about, stability as well as can we actually get projects moving.
Very good. And, I mean, I think it's interesting because what you're saying is that the IRA is doing its job. We need to push on these other levers now, basically. Political stability is probably out of our control. There's a lot of other sort of factors that play into that, but permitting might be something where universities can play a role, right? And so I'm curious to hear from you, because you're doing projects all over the place. Are you seeing any best practices related to permitting where things are coming into alignment that actually, helps to accelerate the process in a responsible way?
Yeah, so I'll give you an example. Certain types of permits, for example, you go to the EPA, and it might be the federal level EPA or it might be the state level EPA. I know in certain states, you can put your application into the EPA for a permit, and it can sit there, and it can sit there, and it can sit there. There's no deadline. So literally, sometimes it sits there for 3 years, waiting for a response. So one way of dealing with that, and this has happened in certain jurisdictions, is you say, okay, I need to hear on this permit within 9 months, 12 months, a reasonable period of time to analyze it and to fully vet it. And if I don't, it's approved. So that actually puts the onus on some timeliness. So it's a pretty simple thing. But there are mechanisms like that, I think, where you can make sure you do the appropriate work, but at the same time, just put some deadlines or some, put it in motion along the way so it's achievable.
Very good. Very good. Excellent. So we've talked about a whole variety of things, the challenge of risk perception as a barrier to increasing private sector investment. We've talked about an unstable and enabling environment as a barrier. We haven't talked about data and transparency. And so I'm just kind of curious, how do you use data and transparency, perhaps in some of your work? And is there a role maybe for universities to play in partnership when we think about data and transparency? Like, where's the role for the private sector there, and is there a role for universities in the kind of work we do around that?
Yeah, I think the analytics that help support capital flows are absolutely critical, and sometimes it is hard to see through to what the real answers are. And so Duke, is a leader in data analytics in many parts of what it does. More transparency and more understanding of what we need to understand in order to deploy capital is absolutely critical. So, no, I definitely think it's an area that's underinvested at this point in time. At least we struggle with it.
Do you, I started off by saying that there are, universities are not the public sector, the private sector, or nonprofit sector. Do you have thoughts about the roles that universities can play beyond just that?
Yeah, so
data
no,
analytics?
I think I'm really excited about what Duke's doing with the climate commitment and all the things you're leading, and so many others in the room are contributing to making it happen at Duke. It is so important to have universities help lead in this, and I think of it as an ecosystem. I mean, we have government, we have NGOs and policy influencers, we have businesses, we have investors, so we have all these constituencies that are in and around energy transition. And a lot of them are viewed as having strong views, or maybe even an agenda. And I think the university, such as Duke, can play such a role as being, I don't know, a balanced participant in terms of a balanced view, not necessarily having a strong view or an agenda, but really just trying to look at the landscape and get to the right solution. And that obviously can come in a bunch of different layers. One is obviously great research and trying to think about analytics, data analytics, policy decisions and the impact of policy decisions, trying to really flesh out, what are the key elements that we need for the energy transition. And with that research engagement, obviously, and there's already a lot of this that goes on, but it's so important to not just publish a paper, but actually engage with key stakeholders to help drive knowledge about what is the balanced approach to getting to the promised land. And part of that is convening leaders, as you've done today, a lot of people that will help drive this. And ultimately, I think has happened in sectors, and I think it's happened in the wind and solar sector in a large way, but we're trying to go beyond wind and solar now and really tackle this even more broadly. We need an ecosystem where all those different players are working together and helping drive solutions. And not everything's going to be uniform. We're not all going to be in lockstep and thinking that this is the path. But if we can collect and generally move in a similar path, it's incredibly powerful. And I think in wind and solar, 15 years ago, it was a cottage industry. Jigger, who's an incredible entrepreneur, he helped start a company called SunEdison. We made an investment with SunEdison 15 years ago to help drive more solar power utility activity around the world. At the time, everything was different, everything was complicated, every power purchase agreement was unique, each project was unique, the equipment was all different. And what we tried to do is homogenize it all so we could actually understand what we were investing in and then help drive more investment. And we actually did tremendous work together. But that took, thinking about government policy and about revenue constructs and how we were going to run the business and the technology. Solar panels they'd existed for a long time, but the technology was relatively new. We had to put all that together and help drive it. Today, it sounds ridiculous because it's a huge industry where hundreds of billions of dollars are being invested every year. And everybody's behind that, and the policy and business and investors all are contributing towards that in a real ecosystem. We need to broaden that ecosystem, would be my view.
Yeah, and not surprisingly, I think about this a lot, right? And I mean, in the new role that I have, I'm working with others who have a similar position that I have at other universities, and I convene a call every month where we talk about this. Like, what is the role we can play? How can we all get smarter faster? We're creating our own little ecosystem, but then we're trying to figure out where are the right places for us to plug in the kind of ecosystem that you're working into, right? And so that's what motivates that. Like, how do we really figure out how to do this better as universities? And so that motivates a lot of just my own thinking in this, and that's why it's always interesting to have conversations around this. So let me ask you about talent. And we've got a lot of students in the audience today, and we're keen to create the workforce of the future that can accelerate this transition, and I think we're really proud of our graduates and what they've gone on to do. But what do you see as those talent needs from where you sit? And how can we as universities be doing a better job of creating that talent that is ready to move into a transition and facilitate that transition?
Yeah, no, we see so many great students and folks that out of Duke University and other universities that have such enthusiasm for energy transition and climate as an area. And I love that. And I think obviously educating students and helping them become leaders in thinking through climate-related issues is critical. The one thing, and I mentioned, you and I chatted about this a little bit, one thing sometimes I don't see is the building blocks to ultimately execute. And so what do I mean by that? Well, if you want to be an investor in the space, you need the building blocks of understanding finance and understanding how do you construct an investment, how do you think about risks. And education, over decades and decades has provided those building blocks. This is just being applied in a different industry, if you will, an important industry. So if you think about business, you want to have the tools, you want to learn in your education about the tools you need to manage a business and to deal with management issues that come along. If you're going to be in government, you need to think about policy and how policy interacts with execution in this space. So I would just say, love the enthusiasm, love the learnings and the expertise that so many students come out with, but you also need the basic building blocks of a strong education in order to execute in whatever area that you want to be a part of.
That's great. I'm going to go to some questions. If I get some in here, I'm having trouble finding them on here, but if people are sending in questions, I promise to go look at them. I have one more question for you before we go to that. The summit that we've had today is really focused on domestic, the IRA. And you do work globally. So I'm just kind of curious about what is your perspective on how do we think about billions to trillions internationally? And what are our obligations to the global south, to lower and middle income countries when we think about this? Because we know that's going to be absolutely essential if we're going to be successful in making, stabilizing the climate and undertaking what will be ultimately a stable transition.
No, it's a great question. So, and something I've tried to think about, but it's a big question. As you all know, we could get the U.S. or Europe to net zero. It may not matter because there's a whole rest of the world out there, and this is a global community. We all need to be moving in the right direction, and so it's a real challenge. And I was talking a little bit about ecosystem from the different players: government, NGOs, business, investors, others. We also need that to happen, not just in the United States, but globally. And so there's some interesting things going on along these lines, though, that I think are fantastic. We started a fund. It was actually supported by the government of France, where they put in concessional capital, basically grants, to provide first loss insurance to help support wind and solar projects in global south, emerging and developing countries. And so this fund's invested in Kenya and the Philippines, in Latin America, other parts of Africa. And it's really interesting to see how government concessional capital plus private capital can come together to make something like that happen. And these are in jurisdictions, parts of the world where it's basically very hard for those countries and those communities to afford moving to cleaner energy. And so this is an enabler. There's recently an announcement at COP28 where there's a fund that's going to be putting $30 billion towards sustainable investments. $5 billion of that is meant to be this concessional capital focused on the global south. And if you look at our world, this countries south of the equator tend to struggle with these issues, and we need, again, the global community to be pulling forward. So I think this is a huge issue. It's complicated. We can think about the U.S., but we need to pull together a solution that's global and how to finance, especially in parts of the world where it's more challenging.
Absolutely. We have several questions that have come in, and there are a couple of them that I'm trying to aggregate a little bit. You've posed some really good questions. Some of this has to do with the anti-ESG backlash and the role of, and how it's impacted a variety of financial institutions. So how do you think about that particular trend and BlackRock's role as you move forward?
I think, I mean, the key to always remember is, at least I think it's critical for us to continue to remember, is that we're fiduciaries first. And so we're investing on behalf of pension plans that are saving money for people's retirement, sovereign wealth funds, insurance companies, others that are giving us money to manage on their behalf. And so we, as a fiduciary for that capital, we have to invest it right in good projects that are going to provide a good return. If we can do that in a way that's participating in this transition, this energy transition, that's the best of all worlds. And what I focus on is not investing, as one of our investors said. She said, "You're not investing in what my grandfather's or my father's infrastructure was, but you're investing in what my kids' and grandkids' infrastructure is going to be." And if you want to have resilient investments for the next 10, 20 years, you want to be in what's happening, what's new, what's emerging, what's going to be the future of infrastructure. So I actually think from a fiduciary standpoint, it's really important for us to be investing in what's going to be sustainable in a different way from an investment standpoint into the future. So as long as we're good fiduciaries and we can participate in the energy transition and make good things happen, that's the best of both worlds.
Do you think that there's been a shift in how we think about what a good fiduciary is?
It's a great question. There is a shift, I think, and different investors, as one of my colleagues says, investors are like snowflakes. Each one's unique and has a different point of view. When I heard that, I was like, "You're exactly right. You nailed it." And so there are investors that are seeking the best possible return on a risk-adjusted basis. That's kind of the corpus of what we do. But there are others that want to make sure that we're taking care of workers, that we have good ESG governance practices, that we have a proper health and safety record. But to me, all those things really make, if you have all those things, it's going to be a more solid investment that will drive the right return expectation or the right return results.
Yeah.
So, but you're right. I mean, there are different people that have different views in terms of what they want out of an investment with somebody like us. But ultimately, I think we can have it all.
Very good. Well, that feels like a very good place for us to end up, and I think we are just about out of time. Please help me thank you.